Good evening, everybody. I'd like to call the 2024 public meeting on the Standing Committee on the Alberta Heritage Savings Trust Fund to order. I'm Tanny Au. I'm the MLA for Fort McMurray Wood Buffalo and chair of this committee. Tonight, the committee is pleased to host its annual meeting to hear questions from members of the public who are interested in the Alberta Heritage Savings Trust Fund. I'd ask that members and guests seated at the table introduce themselves for the record, and I will then call on those joining in by video conference. We will begin to my right.
Garth Rosal, MLA, Vermilion, Lloydminster, Wainwright.
Good evening, Mr. Chair. Grant Hunter, MLA for Table Warner.
Andrew Bochenko, MLA for Drayton Valley, Devon.
Ron Weeb, MLA for Grand Prairie, Wapiti.
Eric Bouchard, Calgary Lougheed.
I'm Evan Siddall, the Chief Executive Officer of Aimco, Alberta Investment Management Company.
Good evening, Amit Prakash, Chief Fiduciary Management Officer, Aimco.
Good evening, Brittany Jones, Director of Investment Strategy at Treasury Board and Finance.
Steve Thompson, Treasury Board and Finance.
Kate White, Deputy Minister, Treasury Board and Finance.
Samir Kayanda, MLA Calgary Elbow.
Gurinder Brar, MLA Calgary Northeast.
Court Ellingson, MLA Calgary Foothills.
Warren Huffman, Committee Clerk.
And thank you so much for that. I don't believe we have anyone virtual. Excellent. For the record, I will note the following substitutions. We have member Ellingson for member Kosowski and member Hunter for member Dick. The Alberta Heritage Savings Trust Fund Act requires a committee to hold a public meeting on the fund every year. The nonpartisan staff of the Legislative Assembly Office arrange and promote these public meetings, and I would like to thank all involved for making this year's meeting possible. The Alberta Heritage Savings Trust Fund was established in 1976 with funds from non-renewable resources, and it is managed by the Alberta Investment Management Corporation, also known as Aimco, with direction from the Ministry of Treasury Board and Finance. Tonight's meeting provides an opportunity for Albertans to participate in a discussion about the status of the fund, its investments, and to find out what's in store for the future. The investment professionals who manage the fund to get the best possible return are here to answer your questions. Our proceedings are being broadcast live on Alberta Assembly TV, and the audio and video of this meeting are streamed live on the Legislative Assembly website at www.assembly.ab.ca, as well as on the Legislative Assembly's Facebook and X accounts. I'd like to encourage everyone to join the discussion during our live broadcast. For more information about the committee and its mandate, it can be found on the Standing Committee on the Alberta Heritage Savings Trust Fund page on the Legislative Assembly website. If you would like to participate, you may come in person to the Queen Elizabeth II building until 8:30 p.m. tonight. Submit phone-in by calling 1-800-717-1738, conference code 49609. Or you can submit your questions via the web form on the committee's website. You can also email questions to the committee.admin@assembly.ab.ca. Or you can post questions on Facebook or X by using the hashtag AB Heritage Fund. This information will be displayed on the screen for the duration of the meeting. We hope to respond to as many questions as possible in the time allotted during the question and answer segment of the meeting, which will immediately follow our panel presentations. The committee will alternate questions between those joining us in person, on the phone, and via social media and email. Your input is important to us, and I encourage you to participate, but I would ask that the participants please keep questions and comments respectful and relevant to tonight's topic, the Alberta Heritage Savings Trust Fund. With that, let's take a look at a video on the Alberta Heritage Savings Trust Fund, followed by presentations from the Alberta Treasury Board and Finance and Aimco.
Established in 1976, the Alberta Heritage Savings Trust Fund serves as Alberta's primary long-term savings vehicle, designed to secure a portion of the province's non-renewable resource revenue for future generations. This fund plays a crucial role in strengthening and diversifying Alberta's economy, essentially serving as an investment in Alberta's future. The income generated by the fund supports vital government programs such as healthcare, education, and infrastructure. Initially seeded with $1.5 billion in 1976, the fund has grown impressively, reaching $22.9 billion by March 31st, 2024. Over the years, the fund has contributed to the development of parks, improvements to libraries, maintenance of Alberta forests, and other enhancements to our quality of life. It has also funded endowment initiatives and research projects since its inception. Responsibility for the fund and its investments lies with the President of the Treasury Board and Minister of Finance. The Ministry of Finance sets the fund's long-term strategy, develops investment policies, and monitors performance. The Alberta Investment Management Corporation, Aimco, manages the fund's investments across a diversified portfolio including stocks, bonds, and real estate. In the past 5 years alone, active management of the Heritage Fund has yielded an impressive 6.4% return on investment. The Standing Committee on the Alberta Heritage Savings Trust Fund includes members of all parties, evaluates quarterly reports, approves the annual report, and reports to the Assembly on the fund's progress. The committee engages with Albertans in an annual public meeting to discuss the fund's investment activities and performance. For more than 40 years, the Alberta Heritage Savings Trust Fund has enriched the lives of Albertans and ensured security for future generations. It remains a cornerstone in making Alberta a better place both now and in the future. Your fund, your future.
Thank you so much for that. I would also now like to invite officials from the Treasury Board and Finance for a presentation on the Heritage Fund. Your slides are loaded up.
Thank you, Mr. Chair. Good evening, committee members, guests, and members of the public. My name is Stephen Thompson. I'm the Acting Assistant Deputy Minister of Treasury and Risk Management. I'm joined today by our Deputy Minister, Kate White, Deputy Minister of Treasury Board and Finance, and Ms. Brittany Jones, our Director of Investment Strategy. Thank you for the opportunity to present at this evening's annual public meeting for the Alberta Heritage Savings Trust Fund. Our presentation tonight will cover a brief history of the fund since its inception and a summary of the 23-24 fiscal year results. I'd like to thank those in attendance today for their interest in the fund. Next slide, Warren. The Heritage Fund was first established in 1976 and operates today under the authority of the Alberta Heritage Savings Trust Fund Act. The fund was seeded with an initial investment of $1.5 billion with a mission to collect a portion of Alberta's non-renewable resource revenues and transfer our resource wealth to future generations of Albertans. From 1976 through 1982, 30% of Alberta's non-renewable resource revenues were transferred into the Heritage Fund. Next slide, please. The Heritage Fund was initially established with three objectives: to strengthen and diversify the Alberta economy, to improve life in Alberta, and to provide a future revenue stream to support government services when revenue from non-renewable resources eventually ran out. Next slide. In 1982, contributions towards the Heritage Fund began to decline. Transfers into the Heritage Fund were reduced from 30% to 15% of non-renewable resource revenues. And for the first time, income was transferred out of the fund to bolster Alberta's general revenue and reduce government's borrowing requirements. Since that time, $45.8 billion has been transferred to the government to support its fiscal and capital plans. This began with an $866 million transfer made in the 1982-83 fiscal year. In the 1987-88 fiscal year, a decision was made to discontinue transfers from resource revenue receipts altogether. Between 1976 and 1995, $3.5 billion was used to pay for capital projects, and transfers of just over $600 million were made to other provincial endowment funds. From 1988 through 1995, the fund's value fell from $12.6 billion to $11.8 billion. In 1995, results from a survey of 50,000 Albertans showed that they were strongly in favor of keeping the Heritage Fund and changing it to a generator of long-term investment returns. That feedback from Albertans resulted in a legislative change made in 1997. The resultant mission outlined above still guides the investment decision-making for the fund today. In 1997, the Heritage Fund investment strategy was amended to fulfill three main goals: to earn income to support government's consolidated fiscal plan, to make investments to maximize long-term financial returns, and to improve transparency and Albertans' understanding around the fund. These changes set the foundation for what the Heritage Fund is today and reinforces the mission of the Heritage Fund is to maximize long-term financial returns from its investments. In 2006, contributions to the fund started again, and inflation-proofing the fund became a mandatory requirement. $1.75 billion was transferred into the fund in the first deposit made since resource revenue transfers stopped in 1986-87. Inflation proofing still exists within the Act today and has helped to protect the real value of the fund since its introduction. A further 2 contributions were made into the fund in the 2006-7 and 2007-8 fiscal years. These are the last contributions made into the fund until the changes introduced by the current government. In the wake of the global financial crisis during the 2008 to 2009 fiscal year, the value of the fund declined to $13.8 billion from a high of $16.4 billion just 1 year prior. The value of the fund recovered to its previous levels shortly thereafter and then remained largely unchanged until the 2020-21 fiscal year. Deliberate and meaningful action taken by government to grow the Heritage Fund has resulted in a $7.2 billion increase in the fund's value between the end of 2021 fiscal year and March 31st, 2024. In 2022-23, the Alberta government amended the Alberta Heritage Savings Trust Fund Act to require that income generated by the fund is retained within the fund unless a withdrawal is specifically authorized by Treasury Board. In Budget 2024, an additional $2 billion was allocated to the Heritage Fund. With this contribution, the value of the fund is expected to surpass $25 billion in the current fiscal year. This is a recap of those accomplishments since 2020-21. Now we'll have a quick overview of last year's performance. Get the next one. The Alberta Heritage Savings Trust Fund Act requires that investments must be made with the objective of maximizing long-term financial returns. Assets of the fund are invested prudently to avoid undue risk of loss and to obtain a reasonable return that will enable the fund to meet its objectives. In this context, being prudent means exercising care, skill, diligence, and sound judgment when making investment decisions. Investment risk is managed at the total portfolio level, as well as on an investment-by-investment basis. And a diversification of the fund's investments helps achieve a more consistent returns while reducing total risk. Established return goals and risk tolerances are used to set an appropriate asset allocation, which reflects these goals and tolerances. Established return targets ensure that the return expectations are reasonable given the available investments, the risk of those investments, and the fund's asset mix. Periodic reviews of policies, risk tolerances, and asset allocations are conducted to reflect evolving financial markets, as well as any changes to investment objectives. The Heritage Fund's target is to earn a real return of 4.5% over the most recent 5-year period. In other words, to generate a return that is 4.5% higher than inflation during this time frame. Given recent persistent high levels of inflation, the fund's latest 5-year real return target increased to 7%. Over the same 5-year period, it is expected that the investment manager will add 100 basis points or 1% of value above the return that the Heritage Fund would have earned if it was passively invested. This is just an outline of the asset mix currently in place for the Heritage Fund. The target asset mix for the Heritage Fund is allocated between 3 main categories: 20% fixed income, 35% inflation sensitive and alternative investments, and 47.5% in equities. Aimco, as the investment manager, is allowed to overweight or underweight these asset classes to take advantage of sectors that are expected to outperform and to reduce exposure to those sectors that are not. The asset mix has been constructed to achieve the real return target set for the fund. Total Heritage Fund performance was below its relative return benchmark by 1.7% in 2023-24. In 2023-24, the fund's investment return was 8.1%, while the passive benchmark returned 9.8%. This is the first year the fund has underperformed this benchmark since the pandemic of 2020. As of March 31st, 2024, equities represented the largest portion of the Heritage Fund portfolio at 45.8%, which was slightly underweight the long-term policy target. The underweight portion relative to the benchmark had a negative effect on the fund's returns, as equities were the best performing asset class during the 23-24 fiscal year. Equities, which include both public and private equity, generated a 19.5% return. Strong performance was driven by recovery in the U.S. and international developed markets. Canadian and emerging market equities also contributed positively to the return performance, but to a lesser degree. The overweight position fixed income, which stood at 23.6% of the portfolio, was positive for the portfolio, as fixed income holdings slightly outperformed their one-year passive benchmark. The 30.3% allocation to alternatives and inflation-sensitive assets pulled performance of the portfolio down, as return on real estate and renewables were negative and below their one-year benchmark returns. The category underperformed in 23-24 with a minus 3.9% return. Infrastructure investments earned 2%, while real estate and renewable resources investments lost 7.3% and 4.7% respectively. For the last 5-year period, the Heritage Fund performance has lagged both the passive benchmark return as well as the real return performance target. The real return target for the Heritage Fund is to earn an investment return of inflation plus 4.5% over a 5-year period. Inflation, as measured by CPI, was 2.5% over the last 5 years, and therefore the target 5-year investment return was 7%. The Heritage Fund underperformed this target by 0.6% over the period. The fund's investment expenses were $172 million during the 23-24 fiscal year, which was $38 million higher than the prior year. This year-over-year increase includes costs attributed to a rise in Aimco's assets under management, as well as the investment manager's ongoing business transformation initiatives. The relative cost to the market value of the fund was 0.8%, 0.1% higher than in 22-23. Above those results are just highlighted, and I will end my presentation there and turn it back to you, Mr. Chair.
Thank you so much for that, Mr. Thompson. Next, we're going to have a video from Aimco, and afterwards we will hear some opening remarks from Mr. Siddall and Mr. Prakash.
Investing on behalf of Albertans is a very important and worthwhile cause.
Well, the quality of our team is perhaps one of our largest edges or competitive advantages.
Our team works exceptionally well together, and we really work hard to make sure that we're making the right investment decisions.
We want to position the portfolio to be focused on stronger performing sectors and geographies.
Canada has a lot of infrastructure opportunities, but really to achieve the scale of the portfolio, we've really had to look far and wide.
This enables us to go where the best risk-adjusted returns exist.
In terms of portfolio construction, we really seek to diversify our portfolio across sectors, geographies, vintages, and strategies.
I'm very excited about the future to fulfill the full potential of this program. I know our team is focused on delivering on the objectives for our clients.
I'll take over. Thank you, Mr. Chair. Thank you to you, to members, guests, and members of the public. I'm happy to make a couple of comments on behalf of Aimco and have Amit elaborate on some performance numbers as well. We work on behalf of 15 clients, and we're very proud that one of those clients is the Heritage Fund of Alberta. We're a long-term global multi-asset manager. We said we invest in stock bonds. I think it's stock bonds and real estate. We invest in private equity. We invest in private debt, loan, infrastructure, and renewables. And I may not have mentioned it's $170 billion. Now, I should tell you, these spastic movements are because I have Parkinson's disease, and I'm managing my meds, and they're not working great. So if you can manage the distraction, I can. Our strategy has three parts to it. The first is to put our clients first, and you will know that that's in response to trading losses in 2020 and the suggestion by some clients that we were putting Aimco first and not the clients first. It has been our deliberate mandate to make all decisions in the best interest of our clients and to ask Amit to head a group called Fiduciary Management who work on behalf of our clients. Secondly, we want to, because we work on behalf of 15 different types of clients, that we want to have an adaptable investment platform. A platform that works regardless of what they're investing in and what their investment objectives are. These include insurance companies, crop insurers, a credit union. God, Amit, this is really not easy. And then finally, the third part of our strategy is to invest in our people. We invest in leaders. Actually, Amit and I have stepped out of an annual leaders conference to be here. It's a big part of what we do. Our engagement scores with clients are top quartile. In fact, sorry, top decile compared to our peers. Compared to our peers, while we are a long-term investor and we're talking about 1 year's performance in the past fiscal year, even that year, I think we were only beat by one of our Canadian peers in performance. It was a very, very, very difficult year. And we also operate as a low-cost manager. We are a bottom quartile from a cost point of view in terms of our direct costs as Aimco. Performance fees are, of course, earned by the managers who work on our behalf. I think what I'll do there, because this is making me nuts, is hand off to you.
Okay, thanks, Evan, and good evening, all. Again, Amit Prakash, Chief Fiduciary Management Officer, and I will add some color to Mr. Thompson's presentation on heritage performance. So first and foremost, I'll start with repeating what Mr. Thompson said. The one-year performance through end of March was 8.1%. But to zoom out and focus on the longer term, the 10-year performance for the Heritage Fund was 7.6%, ending March 31st of this year, which was ahead of both the real return benchmark as well as the policy benchmark over both across both those reference returns. The second point to highlight is the policy mix that the Treasury Board and Finance team delivers to us. We are responsible for implementing it, but equally working closely with the Treasury Board and Finance team and other clients to interact with them to the extent as managers, as we review the portfolios, as we look at the markets, to share insights and work collaboratively for the greater good, if you will, for the Heritage Fund and ultimately the Albertans. And from that dimension, the fact that the portfolio is diversified across real estate, across renewables, across public equities, etc., and the huge benefit of that portfolio is on the one hand, public equities being up almost 24%, whilst real estate was down 7.3%, but the combination of having a wider exposure to a wide set of asset classes is ultimately held and drove the overall performance of the Heritage Fund. Two other quick remarks. So clearly, returns very important and central to our deliverable. Equally is managing the risk of the Heritage portfolio. And then on that dimension, we again monitor a host of risk metrics that again we utilize for managing the fund as well as reporting to clients. Happy to report that the fund was managed within the risk parameters as specified to us. And then finally, one of the other critical parts, particularly for institutional pools of capital such as the Heritage Fund, is the liquidity profile of the fund. And so the most recent number for the Heritage Fund was roughly for each dollar of exposure, we have $2.50, or the Heritage Fund has $2.50 of liquidity that is available, whether it's through the public investments, public equities, fixed income, etc. So all of that to say that not only the returns were attractive over the longer term, but from a risk perspective, from a liquidity perspective, the Heritage Fund continues to do well.
And without being too technical, what I was talking about is we take a look at the amount of money we may have to pay out over 90 days, whatever that number is. So he's saying we have 2.5 times whatever that 90-day number is in hand.
And with that, I'll turn it back to you, Mr. Chair. Thank you.
Mr. Siddall, Mr. Prakash, thank you so much for taking the time for that. That's fantastic. Before I open the floor to our questions, I would just like to remind everyone that we encourage Albertans to join the conversation and submit your questions to the committee and our panel of experts. If you would like to participate, you may come in person to the Queen Elizabeth II building until 8:30 tonight. And again, we're just north of the legislature. You can phone in by calling 1-800-717-1738. Conference code 49609. You can also submit your questions via the web form on the committee's website. And you can also email questions to committee.admin@assembly.ab.ca. And you can also post questions on Facebook or X by using the hashtag Alberta AB Heritage Fund. And with that, we will now open the floor to questions from members of the public. And I think it's important to perhaps we give those who've taken the time to come in person to the first opportunity to ask those questions. And I do see two people directly across from me there. That is fantastic. Sir, I do ask that you do state your name for the record before you begin.
Well, thank you very much, Mr. Chairman. Robert Aska. I've got some questions that will take us back a little bit in history to 2 years ago when your colleague, the deputy chair, Mr. Roswell, was the chair. And at that time, I asked the CEO of investments, Ms. Lau, some questions about the Heritage Fund's report in 2020 that basically said that the Alberta growth mandate closed down and met all investments met the target. And at the in the discussion in Hansard on HS 221, and that was in October 22, she indicated that Trident was one investment that they would basically get nothing on. So my follow-up question was essentially, how can the government, how can the minister and the people that write the report for the minister, how could they have made that claim? Now, Mr. Epp answered, we're not prepared for that question. And Mr. Roswell, then the chair, said, maybe we can get a written response later if that's possible. Okay, all right, we'll get a written response. Now, 2 years after the fact, that shows you how well organized I am, and I'm not sure if there's a statute of limitation, but I'm wondering if I can at least get some reaction or some idea as to whether that claim could be examined again and corrected, if that in fact is required. So that's my first question. I'll have some other historical questions, but do you want me to go on?
Perhaps Dr. Aska will allow them to answer your first question. Is that fair?
Okay, great.
Thank you for the question. in terms of the return of specific investments, we don't have the data here in front of us, but happy to follow up. And likewise, as you suggested, if there was a written response that we provided in 2022, again, we can follow up to ensure that that's available to the committee.
Thank you very much for that. Go ahead, sir, Mr. Thompson.
And certainly from the department side, I can't speak to what was promised in 2022. We can apologize for not having provided it, and we will follow up with that question.
With that, I understand we have one question on the phones. Perhaps we can proceed to that. Go ahead, Mr. Hunter.
Sorry, I just want to get some clarity. So how will the follow-up happen?
We will go back to the 2022 reports. We will examine the issue in question in terms of investment return and loss, and we will provide full details on what we can find.
Will it be posted so that the doctor will know, or when would the next time be that he can find this information out?
We can certainly get it directly to Dr. Aska as it is his ask, but we will provide it through this committee for approval before we do so.
Thank you.
All right, with that, we will go to the phones. Hello, you're on the line.
You have one line for Teresa. Please introduce yourself.
Hi there, if you're on the line, please go ahead. Please introduce yourself and then ask your question. We can always come back on the phones if there's no question. So back to our members from the public. I understand perhaps you might have another question, Dr. Aska? Please go ahead.
Thank you, Mr. Chairman. This is a follow-up from 2023, and the reference is HS 32. And it pertains to a question that MLA Kayani asked of the department. It very much goes to the heart of disclosure. And as you know, our committee members know from last year, the Heritage Fund doesn't have a really distinguished record in disclosure other than in 2011 when they did issue a 103-page report which listed all the investments. So it's quite clear that Aimco would have a list of all the investments. Now, Mr. Kanadi was answered by Mr. Epp to the effect that the disclosure, the lack of disclosure is for economic reasons, not for political reasons. And I just want to push back on that a little bit in this year's public meeting. It just seems to me that if the Norwegian State Pension Fund and the CPP Investment Board and CalPERS can release their investments, why doesn't the public in Alberta know the investments that are being made? And so what I'd like to explore with the department or with Aimco is some clarity on that. Like, for example, in private equity, do the contracts require that this not be disclosed? I mean, now the Heritage Fund is a public institution. It's different than BlackRock. So I just wonder, or whether there's something in real estate that for some reason they don't want to disclose, or if there's some other transaction that is being contemplated. But what the other funds do is that they provide information typically every 6 months or every quarter, and that's usually reported 90 days afterwards. So I'm really trying to struggle to understand why there's this big blanket over the Heritage Fund. And you know, it leads some people at least to think that there's something being hidden. So that's my question, Mr. Chair.
Thank you so much for that, Dr. Aska.
Thank you for the question. So I'll speak to the part on behalf of Aimco as the investment manager. So we work with all of our clients, as you said, and as you would expect. You know, we of course have holdings into the final detail, but we work with our clients in terms of what is disclosed to the general public, and that's how we operate across the board.
Yeah, and I'll add that we are endeavoring to make our disclosure more consistent with the others. We are constrained, as some other investment managers. The Caisse de dépôt, for example, has, I think, 9 clients, again, by what our clients request of us. It's typically not, Mr. Aska, a fund requirement that we not disclose. Listing companies is usually fine. Listing the value of the investment in that company is often more difficult and proprietary, or thought to be proprietary.
And from the department's perspective, I can't comment on things that my previous colleagues may have said here. But I will say that we are comfortable with the current level of disclosure. We feel it gives an adequate portrayal of the risk associated with the total fund. And there are certainly commercially sensitive reasons to not disclose, particularly in the private space. Yes, in terms of top holdings in public equities and credit even, there could be more. But I think what is presented in the report is adequate to assess the performance of the fund. But always we are looking to improve our communication with the public and our disclosure, and we will definitely take under advisement Dr. Aska's comments.
Thank you so much for that. Next, we have some questions online, so I'm going to go to Mr. Rosewell.
Okay, thank you. Thank you very much. Yeah, we do. If you send in emails, that gets accumulated and sent to me, and then I ask the questions. So we can go from there. So Carol from Grand Prairie, how can the Heritage Fund be taken out of the hands of the politicians and put into a decent investment like the CPC? So that might be more you guys.
I will say that there is no political involvement when it comes to setting the goals and targets, the investment goals and targets of the Heritage Fund. It is enshrined in the legislation that the minister is responsible, but the allocation decisions have been delegated to finance professionals at the department, and we communicate those to the finance professionals at our investment manager, Aimco. So I can assure our Albertan writing in that there is no political interference in the investment of the funds.
Next question, that might be over to Aimco, maybe, is Michelle from Edmonton. The S&P has a return since 2019 of 16.69% per year. Why are Albertans getting such a poor return on investment?
Well, it's not an entirely fair comparison. That's a comparison of public equities, and our performance in public equities would be equally strong. You may want to elaborate here, Amit, but a portfolio approach, we invest in fixed income and several other asset classes that will perform well when public equities don't. And the idea of a diversified portfolio is that over the long run you have more consistent and reliable superior returns.
And just to add to that, Mr. Chair, as you saw earlier in the committee meeting, part of the objective of the Heritage Fund is to deliver on the returns, but with a strong risk lens to it. And that's what a portfolio such as Heritage allows it to do, and therefore it has fixed income, real estate, etc., where certainly over this period the return was lower, but equally the risk was lower. So what you get is both the risk and return going hand in hand, and that's thus comparing it simply to S&P 500 is inappropriate from that perspective.
Thank you very much. I think the chair has a question on the phone again that we're going to try.
That's correct. For the caller on the phone, if you are able to, please ask your question. The floor is yours.
Teresa Ormberg, if you have a question, please go ahead.
Okay, thank you so much for that. With that, we will go back to Mr. Rosewell for the online questions.
Okay, I have two more here, and then maybe we'll go back to the room here after this. So this may be a question, I'm not sure if anyone can answer it, but some of the questions I get in aren't in the realm of the people that are here answering questions, so if that's the case, I maybe won't do them. But this one is Matthew from Edmonton. Has the committee considered converting the fund to a dividend-paying wealth fund similar to the Alaska Permanent Fund, where all Alaskan citizens own a share of the fund and are given a dividend each year based on a 5-year rolling average funds return, amounting to about $1,000 per person in 2017. So that might be a question for you guys.
Certainly, we are aware of how the Alaska Permanent Fund is managed and its strategy to pay out dividends directly to Alaskans in cash. That, in effect, is very similar to the way the Heritage Fund had been managed up until we stopped drawing funds out. It's just that the funds were directed directly to Alaskan citizens rather than put into general revenue to be spent on government priorities as they were here in Alberta. The decision was made in 2021 to stop drawing the cash out of the Heritage Fund and instead to grow it. So all of the earnings in Alberta are retained in the fund so that it can grow, so that it can have a meaningful impact when it reaches a critical mass in the future, hopefully with the hope that eventually it will replace or supplement income from the fund as natural resource revenue depletes. So we would rather invest for the future than to pay that cash out now in what would probably not be life-saving amounts to Albertans.
And the last question in my first set is, and this one I don't think anyone can answer, but I just want to give an example of maybe what not to ask. So it's it's Kendall from Lethbridge. Can the fund be used for new infrastructure? Lethbridge really needs a new bypass highway. So that's more of a government decision, and it's not, and the people that are here don't make those decisions. So that's an example of a question that can't get answered at this venue. So go ahead, Danny.
Thank you so much for that, Mr. Rosewell. With that, is there anyone else from the public in the room that may be interested in asking a question? And again, please just introduce yourself for the record, please.
Certainly, thank you. My name is Greg Meeker. I'm just something back from the intro. Is the fund adding value through active management? And in particular, I'm looking at note 8 in the annual report, subnote C. In the Statement of Investment Policies and Goals, the Ministry of Treasury, Board and Finance expects the investments held will return 1% above policy benchmark on a rolling 5-year. Now, I'm interested, of course, we didn't make that this year, our rolling 5-year. We were underneath the policy benchmark, never mind the target that's above the policy benchmark. I want to be reasonable, so out of how many years, how often would we expect it to be reasonable that we would hit the active management target of 1% above the policy benchmark on a rolling 5-year? Thank you.
Thank you for that question. There isn't really a magic magic number, other than looking at the longer term. And particularly, what I mean by that is the last 5-year period includes the highest increase in inflation that we've seen across multiple generations, and particularly that's impacted the inflation-sensitive asset classes, including infrastructure and real estate. Secondly,
And fixed income.
And fixed income, of course. And secondly, the real estate portfolio was also impacted by the aftermath of the COVID. So over this particular 5-year period, Mr. Mika, you're right, it is behind relative to the benchmark. Over the 10-year period, and then I have the numbers here, relative to the policy benchmark, it's ahead of 50 basis points, and relative to the real return target of CPI plus 450, it's ahead by 110 basis points over the 10-year period. Hopefully that helps.
I would just like to echo Mr. Prakash's comments on the fact that we are long-term investors, and although this is set over a 5-year period, the performance over the longer term has met that target.
Okay, with that, we have 2 more questions online. Mr. Rosewell.
Okay, Milo, I don't know where from, but for your real estate and private equity investments, are they carried at book with profits only realized at the time of sale, or mark to market on a regular basis? If mark to market, how frequently?
They are marked to market annually. We would do it more frequently. In particular, the cost of assessing the value of a real estate project is quite intensive. That typically is done annually, but it's done more frequently if the information is available in other asset classes.
Thank you very much. And another question that probably can't get answered here, but I'm using these as examples of what not to ask. But would the Alberta government consider taking $1 billion from the fund to create an Alberta tax collection agency? So again, that would be a government decision, not something that the people here would answer. So you can carry on.
Thank you so much for that, Mr. Rosewell. Why don't we change things up and see if His Majesty's official opposition perhaps has a question?
Yeah, for sure. So it's a question I often ask at the quarterly meetings. The Premier has stated that she wants to get to a $250 to $400 billion heritage fund. She promised a plan to make that happen by the end of this year. I don't recall if a plan has been proposed, and we're getting close to the end of the year. So just wanted some feedback on where that is.
Yeah, so I am happy to report that is still the goal. By the end of this calendar year, there will be a report and a plan released.
Okay, thank you.
Thank you so much for that. And we'll next go to government side. Mr. Weeb.
Thank you, Mr. Chair, and thank you all for being here and for your efforts to grow the Savings Trust Fund. I have a question relating to the report, specifically regarding real estate investments. Page 15 notes that real estate investments have been a struggling asset class with higher interest rates and a work from home trend, which has negatively affected commercial offices and downtown markets since the pandemic. I also see on page 10 that the inflation sensitive and alternative assets lagged in 23-24, mostly due to real estate. What are your projections for real estate investments and an asset class going forward?
Thank you for that question, and certainly in most of our client investment committee settings, that's a very popular question and has been for the last year and a half. So what has been in the headline and what has been the weak link in the real estate portfolios typically have been two areas. One is commercial real estate, and that's a reference to going back to working from home, the hybrid working arrangements, and that's still evolving. And then the second was retail, that was particularly hit hard by COVID, but as equally as an aftermath by the online purchasing of goods. So those across those two areas, we feel that on the commercial real estate there is still pain ahead of us. I think we're getting closer to the bottom, but maybe over the next year and a half. Retail, that has started to actually flatten out and improve. On the other side of the portfolio, the part that normally isn't in the headlines, is the growth on the warehouses, the distribution. So think about Amazon and all the things we get delivered. Multifamily, alternative housing, that's done really well. Data centers, self-storage, etc. So there is at least a big chunk of real estate that has actually done well. But given the preponderance of commercial real estate typically, and shopping malls and retail, the portfolios have struggled.
Thank you. Do you, how long do you expect this trend to continue, or do you see any changes at all?
So we do expect as I said, the retail, is starting to turn around, and many of the retail shopping malls, etc., are also getting repurposed in that you see a lot more services and a lot more experiential stores, whether it's our own malls in the city here or across the country. The commercial real estate, the office buildings, that is a slow burn. Now, what we are doing in our real estate portfolio and the portfolio that Heritage Fund owns is we've taken a hard look at what we hold in the strategy. We've refreshed the real estate strategy, and we are second year of rebalancing the portfolio, if you will, relative to what we see where the opportunities are looking forward.
Thank you.
All right. Now perhaps we'll go back to any members from the gallery who might wish to have another question. It's just you two. Oh, they're just here for their good looks and charm.
Well, I'm afraid I'm going to have to push back a little bit on the disclosure, the answer. I kind of heard two answers. One is no problem with public equities from Aimco. I wasn't sure if the department was at Edom on that. But I also wonder to what extent, for example, your U.S. holdings, would you have derivative positions? Would you have passive investments, and would those be subject to disclosure? Now, why I want to push back a little bit is the comment from the department about our disclosure is adequate. Yes, the top 10 holdings are there, but with the Alberta growth mandate, and I hate to come back to that again, but there was a listing of all the commitments, the type of instrument, and it dawned on some of us that have difficulty sleeping at night that we could dig into this story and discover some of the issues there, both that have political, finance, and energy dimensions to it, that are very important matters for the public here in Alberta to understand. Where is the money going to, and what were the conversations between Aimco and the investee companies, and why was the province, through the Heritage Fund, spending 2/3 of of the growth mandate on energy investments at a time when the industry wasn't growing. It was collapsing. So now that was then, this is now. But my point is that I think to be able to go down to a granular level and not rely on the top 10 holdings is really the way to go. Because I think everyone in this room wants to see and has the same goal of improving performance of the Heritage Fund. And again, back to this theme about disclosure, transparency, sunlight is a very good thing. It's a very healthy thing. It might make some people uncomfortable, but the public is entitled to understanding how these investments were made. So that's more of a comment than a question, I'm afraid. Thank you.
Question?
Well, yeah, it's actually a little bizarre, and that is the presentation that was given by the department. I noticed that its classification is protected A. Now, does that mean I can actually FOIP it and actually see it? Or maybe I could have an explanation about what protected A means.
I can take it. So I guess maybe we'll just start with protected A is the default classification. It is for a transitory document or commercially or cabinet sensitive. It is too high of a classification for a public meeting, and this is declassified, so no longer protected A. In response to your comments around disclosure, we will consider additional disclosure. I can envision a time that we would be disclosing the back and forth of investment decisions and conversations in any type of disclosure, simply for the commercially sensitive nature. Again, we will have a look. We will consider additional disclosure, and weighed up against that will be the potential risks and costs. But we will commit to seeing if it's feasible to do additional disclosure.
Thank you so much for that, Ms. White. And with that, we do have a caller on the line. Please go ahead with your question.
Rosemary, your line is now open.
Pardon?
Go ahead.
My question is, has the Heritage Fund invested in other oil and gas companies that have gone bankrupt, like Trident? And which ones?
For you that's on, who just called in, would you mind introducing yourself again, please?
Yeah, Rosemary Sakella, Rocky Mountain House.
Thank you.
Has the Heritage Fund invested in other oil and gas companies that have gone bankrupt, like Trident? Which ones?
Thank you so much for your question.
To fully and completely, thank you for the question. To answer it fully and completely, since Aimco was founded in about 15 years ago, so we could again, we can take a look at the records and respond. What I would say is, at least in the recent past, there hasn't been any instance where that's been the case.
Thank you so much for that. Did you have a follow-up online?
I had another interest in the $10 million loan made to Paraday Energy to purchase Shell old oil and gas wells up and down the west side. And that $10 million was then turned into stock instead of being paid back to the Heritage Fund or to Aimco. And I believe that stock is now worth pennies, but at the time it was $2 or $3. So what's the situation with that? Paraday is P-I-E-R-I-D-A-E.
We're certainly not aware of that specific investment. We can go back to the records and see, but it is not one that I am in any way familiar with. Did you have a sense of when that investment was made and when it was defaulted on?
Oh, I think it was, yeah, I think it started in 2018 or 19. And it was a loan from Aimco, then turned into stock instead of paying it back.
I'm unaware of any loan programs offered by Aimco, so I wonder if we're confusing this with a different government program, but we can certainly on our side go back and see if we can find that investment, and we will.
Okay, how would I find out your
I think if we have
investigation
your,
on both of those?
through this committee, if you could leave your details with the operator, perhaps.
Sure. Thanks.
Sorry. For the record, we will, Rosemary, if you're on the line, we're going to go through the committee on that one, and we will get your contact information, but we will communicate through the website.
Okay, thank you.
So just Rosemary, just for your knowledge, the answer will be returned through the committee, and at that time we will ensure that's published online, and if need be, we could perhaps communicate directly to her as well.
Am I leaving my information with the operator then? Or?
Yeah, if you're able to email us at
Okay.
Pardon me, at the committee.admin@assembly.ab.ca, we'll be able to respond to your email. Is that fair?
Okay, yep, I'll do that, thanks.
Thank you so much for your questions. With that, we will next go to Mr. Keonde with a question.
Thanks. And maybe I should have jumped in because Pierre Day was one of the names I used to cover. But I went back before I was a politician, and Aimco definitely had a position in its debt, and it was definitely closed out. It was definitely closed out in a debt for equity swap. And I have another question about a similar workout with Razor Energy. Because this was another one where there were dividend payments during the, when the company was loaned, and then it went sideways with a debt for equity swap, and now is in bankruptcy. And I believe Razor is in default of its property taxes as well, which is kind of an unusual situation, I guess, for a funder, a company funded by the Alberta Heritage Savings, or funded by Aimco, actually being in default of its property taxes to Albertan municipalities. And I guess my question is generally around these sorts of resource credit investments. They do go bad. The assessment of the resource quality is exceedingly difficult. Is this an area where you think you have an edge, or is there a strategy around this that you think is any different than any of your other private credit types of strategies? And to be clear, I'm not litigating the fact that an investment goes bad. I recognize investments go bad. What I'm trying to figure out is, was there any learning from this? Was it, is there a sense that, hey, Purity is an example of a company with a particular kind of asset quality. Razor is another one, and these are kinds of companies that tend to go sideways.
Thank you for the question. So bit of just a quick bit of history before going to the crux of your question. Have we learned anything from that experience? So just by way of background, Aimco first invested in Razor Energy in January 2017. And that was a $45 million first lien loan facility. So that was the first instance. And then we had subsequent two transactions, roughly $5 million each. Now at that equity, excuse me. At that time, at funding, we thought of Razor as a junior oil producer, and there was an attractive opportunity to develop light oil pools in central Alberta. So that was the investment thesis. And prior to the oil collapse in 2020 due to COVID, the company was in reasonable shape, and the thesis still held. But clearly, after the oil collapse, that wasn't the case. Over time, our teams felt that the Razor's upstream operations underperformed our expectations, and then we ended up with subsequent having to deal with that situation. The broader question in terms of whether from that investment or any other investment, how does that feed into what we do with sectors and how we operate? So one of the things that has happened over that period is a closer look, particularly at that sector. Now, that type of investment, that part of the percentage allocated to those types of investment, that has shrunk over time. But more fundamentally, the lesson is around it's yet another lesson around underwriting, and the fact that good fundamentals in the appropriate market environment lead to good outcomes. Now, having said that, as you said, we will get these investments wrong once in a while, but I know that wasn't the point you were making. Thank you.
If I can add, because you asked a quite direct question, is this an area where we think we have edge? The answer is no. I can't comment on the sources of edge at the time this investment was made, some 7 years ago, but certainly not now. We would not make venture investments, let alone this type of investment in this sector right now.
Thank you. I do have a follow-up, because and only because the previous questioner had said, were there any other money-losing resource investment like Trident, and we've just named two. Just pointing that out. Yeah. Okay. Thank you.
Thank you very much for that. And just for clarity for everyone online and who's called in, any answers that are written will be provided to the committee, and they will be posted on the website. You can also follow along on our next committee meeting when we might acknowledge such answers as well, that they will be on the website. So with that, we'll next go to Mr. Boychenko.
Thank you, Mr. Speaker. Thank you to the official opposition and everyone that came here today to talk about the performance, growth, and thanks to the Dr. Bob Askef, even the history of the Alberta Heritage Savings Trust Fund. So it's interesting to go back in time a little bit and learn from that as well. So I know we talked about it in the previous meetings, but just for the benefit of those who are joining us here today, I would like to ask about the asset class return versus the benchmark table. And I see that the past year, the fixed income and the equities class both outperformed the benchmark, which is great to see. I also see that the inflation-sensitive asset class underperformed the benchmark, which is kind of seems to me, makes sense to me, right? Considering the cooling inflation environment we have seen in the latter half of the past fiscal year and the uncertainty of the around the rates, my question is, could you speak to your projections for the inflation-sensitive asset class going forward as we hopefully continue to see the inflation fall?
Thank you for the question. The inflation-sensitive and alternatives category that the Heritage Trust Fund invests in includes real estate, infrastructure are the two key areas, and the third one is renewables. Across these, on the real estate, as you heard me describe to a previous response, there are parts of it that are still, in the process of recovery, but there are other parts that are doing quite well. And our projections, the longer-term projections we have for Canadian real estate is actually 7.4%. Foreign real estate is 5.9%. Infrastructure is 7.7%. And these projections that we have is something that we do on an annual basis. This is looking out 10 years. And it takes a pretty comprehensive approach in terms of building up those forecasts, and that's the view we have. And again, more fundamentally, if you think about the big parts of the real estate market, particularly the multifamily. Is again in the news all the time with the shortage of housing, and we see that. You see that in logistics. And finally, infrastructure, again, certainly in North America, has been a central theme from a public policy perspective in Canada and US and other geographies. So again, from all of those perspectives, those asset classes, we expect to do well as looking forward.
You, something that's even more concerning to me is how significantly strategic opportunities asset class has underperformed the benchmark, both in the past fiscal year as well as the past 5 years. On the page 9, it states that the strategic investments, which allow the assets manager to take advantage of opportunities outside the three main asset mix categories, contributed to about, I think, $4 million loss during the 23-24 fiscal year. Could you share with us, with the committee here, what types of assets are held within that?
So these are legacy investments which are in runoff mode. The exposure that the Heritage Fund has to those investments is relatively small. And again, these are areas that we're not actively investing in. These are in runoff modes, mode, and we again over the next little while we do expect them to go to zero.
Yes, so mostly legacy investments there. Okay.
Yeah.
Thank you.
All right. Next, we'll go to Ms. Rosewell for some online questions.
And this question from Linda is kind of around asset allocation, and I'll just read it, and then maybe you can describe where they can look to get that more detailed information if you can't provide that right now. But what percentage of the fund is invested in rental real estate, food production, manufacturing, and retailing, groceries? What percent is invested in oil and gas sectors? And she says writing in reply is good at a later date, but maybe you can just talk about your asset allocation mixture and how detailed, where she might be able to get a detailed answer.
So we don't have the detail, Mr. Chair, here. It's a very, very specific question in terms of what we own. We do, again, as I described, own real estate across a range of asset classes, and the annual report also has some details on that.
Thank you, Mr. Chair. And from a asset allocation standpoint, we look at broad asset classes and how those broad asset classes work together. In the opening remarks, Mr. Thompson talked about equities, fixed income, alternative asset classes. So we can take a look at that and what we can come back with on that, but they would be spread across the total portfolio, and we can come back with a response that fits what we've been asked.
Thank you. The next question, this is Milo again, and it was the mark-to-market question. He took your answer as just being relative to real estate. Is that the same case for private equity? Is it mark-to-market once a year, or how often?
Yeah, it is indeed mark-to-market once a year. The funds themselves mark-to-market some more frequently, but our fund investments, our co-investments in private equity, our investments in infrastructure, all of our private investments, we endeavor to mark-to-market annually, at least.
At least, okay.
And of course, public investments, the market prices are available, so they also are mark-to-market.
Okay, thank you. That's it.
Thank you so much for that, Mr. Rosewell. I wonder if we can get some clarity for all these folks that have emailed and called in their questions. Is a lot of this information available publicly in any published documents?
There's some significant information available on behalf of all of our clients, so not specifically to the Heritage Fund, on Aimco's website, yes.
So folks can go on Aimco's website to
get aggregate information for the total fund, which includes pensions, the Heritage Fund, and other clients.
Okay, so just to clarify for the public out there, some of the responses we might be able to refer to in the documentation that's already out there, and we'll provide those on our website. Yes, thank you so much for that. That's fantastic. With that, we will next go to our members of the public in the house here. Would either of you like to, either of you two, like to go up and speak? Dr. Aska.
Okay, well, I'm dredging things up here, but I will take the segue on Razor Energy. And in the Razor Energy's case, there was a press release, I believe, correct me if I'm wrong, that Cebu Investments was also involved in that, which is a wholly owned subsidiary of Aimco. And this may not be a proper question for this committee, but more generally, when Aimco does their financial accounts, would you normally list all your subsidiaries, including, numbered companies? And just one more question, and this might be for the department. Does the cabinet have to approve, or Treasury Board have to approve the creation of subsidiaries? Because I know that change had been made many years ago when I was with the department. So, question about Cebu Investments and disclosure of subs, if a valid question, and the issue about cabinet government approval of subsidiaries being created by Aimco, which does tie into what it does for the Heritage Fund as well as other pension clients.
I'll lead for a change and let Aimco follow on. Sorry. Yes, the creation of subsidiaries for any of our Crown corporations, including Aimco, requires the approval of cabinet, so they are OC creations.
And these structures, we do not disclose all of our subsidiaries. It would be a burdensome disclosure, Professor Aska. We do, however, in cases like this, disclose the fact that they exist. We disclose this relationship. These are not secret, and I think we've tried to make full, true, and plain disclosure of the facts involving this particular situation.
In terms of Razor, and yeah, okay, in terms of that transaction. Yeah, okay, thank you.
Thank you for that, sir. Next, we're going to go back online. Mr. Rosewell.
Okay, this is from Sherry, and I think it's, her question is, can you expand on where all the money from the fund is going? So maybe go through the history of how much went in and then how it came out, and there's an inflation adjustment left there, and then what we're doing now. So maybe just go through that history again.
Sure, we can run back through a quick history. And I think our presentation will be available online as well through the committee, and it does outline that fairly well. Originally, the money went into the fund and not out at all. So 30% of natural resource revenues went into the Heritage Fund as a savings vehicle. That was reduced over time as fiscal strains were apparent in the province. Eventually, we got to the point where no money was being directed into the fund, and any earnings were drawn out of the fund and deposited into general revenues for general purposes, capital and operational spending. That changed in 2022 when government has directed that all earnings of the fund be retained in the fund. So that simply means that everything that the Heritage Fund earns remains in the Heritage Fund, and that money is reinvested. And that is how we plan to grow the fund to the targets that the Premier's stated publicly of 250 to 400 billion by 2050. We will have more around that in a public report available by the end of this calendar year. But no money is being drawn out of the fund for the first time since the 2008, sorry, since 2008. This is the first time that we haven't been drawing money out of the fund. So I can assure our caller that everything's being reinvested, and the money isn't going anywhere other than back into the fund to grow.
The next question is from Robert from Calgary. And first, he just wants to make a comment. He says, Alaska Fund and the Alberta Heritage Fund were both set up in '76. Today, the Alaska Fund is 70 billion, while the Heritage Fund is 23. And then the second question is, the Act states that the mission of the fund is to provide financial returns for future generations of Albertans. Would that not include allocating capital locally to innovation, venture capital, energy transition, other forward-looking investments beyond Alberta-based publicly owned oil companies?
Again, the department is setting the overall asset allocation. The fund manager is making the investments. The main reason the fund didn't grow as it did in Alaska is for the reason stated earlier. We took all the income from the fund, and rather than giving it directly to Alaskans, as they chose to do there, the government brought it into general revenue, invested in capital projects and operational spending like healthcare and education that did provide a return to Albertans. It did not provide a financial return to Albertans. So when we go back to the change to set the default of Heritage Fund retaining the income, which was introduced in Budget 2023, first decided at the end of 2022, it really changes the game, and it's one of the reasons that you've been able to see the fund grow so quickly in the last few years compared to what we saw before. So in just the last 2 years, we've seen the growth of 7.2 billion. Through that decision to retain the income. So now that you have the Heritage Fund retaining all its income and the Alaska Permanent Fund continuing to siphon off dividends, our expectation would be that at some point the Heritage Fund will overtake the Alaska Permanent Fund again. And I want to reiterate, we are going to have a growth plan for the Heritage Fund out before the end of the calendar year.
Okay, thank you. I had another one just come in. Linda from Calgary, and this is kind of the relationship between Aimco and the Heritage Fund. So she just might need clarity on how that relationship works. Has there been any investment swapping between the Heritage Fund and other Aimco investments?
I'm pretty sure the answer's gotta be no. No?
The Heritage Fund is invested through commingled pools. And so that's how the investments are made.
The reason I paused is you could have the Heritage Fund increasing its investment in one pool while decreasing another, and that could involve a swap, I suppose, with a different client, but it's just an exchange of that, not in the sense that she meant, I'm quite sure, through the chair.
She meant that, you know, Aimco has investments and they're swapping, like Aimco invests money for clients. You know.
Yes, we do, and we have a client fairness approach to what we do, and we make sure the pricing's done in a way that's fair to all, therefore, market pricing.
I'm assuming that's what she was asking, so, thank you.
Thank you so much for that, Mr. Rosewell. Next, we will go to Mr. Kionde.
Thank you, Mr. Chair. So on June 13th, Premier Daniel Smith said if we took a different strategy with those Heritage Savings Trust Fund assets, more like a sovereign wealth fund, that might give us more opportunities to be able to assist in de-risking projects that we're finding difficult to be able to get financing. Can you confirm whether that is happening or not?
So I can confirm that we will have a plan out by the end of the year. The plan will contain elements that the legislation is enshrined today, which is returns first. So we do not envision moving away from the returns first enshrinement in the legislation for the Heritage Fund.
And can you confirm whether you have had conversations with anyone from the Premier's office about asset allocations, about investment strategy, about specific investments?
I can confirm that asset allocation, investment strategy, specific investments have all been delegated to the department, and we have not had conversations with the Premier's office on those matters.
And specific investments?
Certainly not specific investments. Maybe I should clarify, of course, as we're looking at a strategy, one of the things we're going to consider is the asset allocation mix, but we have certainly received no direction from the Premier's office on a specific asset allocation mix. Of course, the words asset allocation mix would come up in any discussions around a future plan, but I can confirm there has been no direction from the Premier's office on asset allocation mix or specific investments or specific strategy within that.
Next, we will go to government side. Mr. Hunter.
Thank you, Mr. Chair. Earlier was asked or stated that that we compare in terms of performance with other funds in Canada. So the Canada Pension Plan investment fund, so what I think they're at about 7.8% that they get. So is it because of the economies of scale that they get a little better, or I mean, it's 650 billion versus?
They are, if I may, Mr. Chair, they generally allocate much more than we do to private investments, and in particular to private equity. And so it's an asset allocation mix decision that they've made compared to our clients. Aimco does not make asset allocation decisions. Our clients retain that responsibility to themselves, including the Heritage Fund, and in this case through TBF.
Thank you so much for that. Are there any other questions from the audience in the House? Actually, sir, if you wouldn't mind, I think we have a young aspiring mind here that would like to ask a question. Please go ahead, sir, young man.
I'm up here because my mom wants me to look smart, so she wrote down a question for me.
Could you introduce yourself, please?
Clyde McPherson.
How old are you, Clyde?
14.
Attaboy. Thank you for being here.
I see that the income generated this year was substantially higher than the last year. Can you speak to what drove that income and if you expect it to continue?
Great question, thank you. I can start, and so one of the largest allocations that we have within the fund is to equities, and global equities had a great year. So part of the allocation decision to have that portion of equities in the portfolio was helpful in driving the returns. And I'll ask Aimco to help us articulate as to how those returns were driven.
Yeah, so equities almost 45% plus of the portfolio. Global equities are up almost 24% over the 12-month period. In addition, one of the impacts on fixed income particularly is as the yields go up while the performance was negative, the higher yield meant larger coupons or larger income from any of those types of investments, including private credit, mortgages, etc. So both the combination of public equities, all of the fixed income and the fixed income related assets translated into the income, the greater income that the Heritage Fund had over that period. Great.
All right, Mr. Nakar, did I pronounce your name right?
Mr. Chair, that's Meeker.
Meeker.
Yeah. Yeah, no worries. No worries at all. Thank you. I'm going to just refer again to the annual report, note 7, subnote A, para 2. And of course, we're referring to the investment expenses at 80 basis points for this last year that Aimco has charged the Alberta Heritage Trust Fund. And in para 2, it includes $114,000 charged to the fund by Alberta Treasury Board and Finance for investment accounting and reporting services, which makes sense. My question would be, and $226,000 paid to PNYX Consulting Group SA for professional consulting. And I'm just wondering what kind of investment consulting they provide and where they're domiciled. Thank you.
Thank you for that question. PNYX has been an advisor that has been working with us to develop some investment strategy, which will be available in a report later this year. They are domiciled out of Switzerland, but they have also opened up a subsidiary out of Calgary.
If I could. And oh, there we go. I'll just add to that. PNYX was hired through a public RFP, request for proposal process, in accordance with government procurement policies. And the monies charged back to the Treasury Board and Finance are for auditing services from our audit group.
Thank you so much for that. Next, we'll go to His Majesty's official opposition, Mr. Kanda again.
Thank you, Mr. Chair. It's a question about private credit. You've got an office in New York that I believe was set up to do private credit. I just can't help but feel as though the trade is getting a little bit crowded. Is that, you know, how is your deal sourcing going? Are you and are you finding that you're still getting good deals? And my nervousness around this is that credit always works until it doesn't anymore. And so boy, it seems like everybody and their dog is getting into private credit.
We've been in private credit for quite a long time. That asset class has grown from, I think, $3 billion 4 years ago to it'll be 10 next year. So it's a lot of growth, and it's offered terrific returns and, frankly, very few losses to our clients. It's right now an 85% first lien business, and you're right to identify the New York office as a means of expanding that activity, although we already had existing professionals in both London and Toronto managing that portfolio at about $7 or $8 billion a year ago before Mr. Scudolari joined us, I think a year ago, maybe a year and a half. One of his responsibilities is to make sure that that activity is largely done in coordination with financial sponsors. It's very much a financial sponsor-driven game, and hence we're in the first lien category, so investment grade generally, or just barely sub-investment grade. There's many more high-octane funds. HPS, for example, is one that's operating at the BB area and lower and getting high returns for it. We think that's outside of the risk profile for our clients. For sure, the credit, it's gone to a covenant light, so therefore the contracts are lighter between lenders and borrowers in that market. And we've backed off a little bit recently, and we're intensifying our due diligence activities on deals. But so far, we're earning the spreads and not taking losses. So It's been good for our clients. But you're quite right, it's getting more and more crowded. Now, more and more crowded, I should say, among people like pension fund sponsors and insurance companies. But that's in part because banks, and in particular regional banks in the US, have abandoned the space. So they've pulled away and we've filled some of the gap. The overall credit market really hasn't grown that much.
All right, next we'll go to Mr. Bouchard.
Chair. I'd like to take a look at a highlight from this past year. Page 12 of the report notes that the global developed equity portfolio was the star performer this year, posting a 23.7% return from the fiscal year. I also see that this asset class has performed fairly well over the past 5 years, despite underperforming the benchmark slightly. And returning to page 11 for a more detailed look, I see in the past year, as well as over the past 5 years, the benchmark and actual returns for this asset class have both been generally higher than any other asset class. Given this performance, are there reasons for this asset class to not constitute a larger share of the fund's total investments than it already does?
I'll let Mr. Prakash elaborate, but the answer is it's riskier. That's the short answer.
So unambiguously, public equities, global equities has been on a tear for the last 5-10 years, and particularly in the U.S. also it's been concentrated growth. We do think as we look forward, whilst the returns would still be positive, clearly it won't be going up 24% every year as we look forward. Now there are a couple of things that are still supportive of public equities, and one of the things that we see is still there is earnings growth that we are seeing. What is less likely is what is referred to as multiple expansion is effectively, how cheap or expensive relative to the earnings growth can you buy a stock. That aspect seems to be quite rich and frothy, but however, from the earnings perspective, there is still a growth to be had. And in summary, as we look forward, we still expect the growth to be positive, but perhaps less so than we've seen over the last 10 years.
Thank you so much for that. Is there any final questions from our members in the audience?
Thank you, Mr. Chairman, for your indulgence. Two questions, one on investment philosophy, and then the second one more trying to summarize what I'm looking for as a requester of information on the Alberta Growth Fund. My investment philosophy question to both the ministry and to Aimco is this, that as I understand investment returns, you sort of have two sources. One is the capital gains or losses that are derived from selling or trading the stock or the credit instrument, and then the dividend or the fixed income coupon that happens. Is there any kind of cultural view at Aimco or in the department about for stability of income, let's say, that you would say target 50% capital gain loss versus 50% income, and I also sort of, my question is to the incentive system that Aimco people have, would there be, in terms of the measurement process, in terms of the investing process, are there any incentives or disincentives to more active trading, as opposed to perhaps more of a Buffett approach, which is you buy them and keep them, and then you build up cash reserves to invest in the next crash. So that's the first question.
I will take a stab. As between capital gains and I'll call current income, dividends or interest payments, cash is cash and it doesn't matter when, and there's no real difference in terms of how we look at it over the long run, except I would say that an investment that does not pay current returns is riskier and therefore should pay us a higher return for that risk because there's just less liquidity in the investment, unless there's a different way to get there. As to whether there's any incentive, difference in our incentive structure, no, I don't think so, other than, we want people to be looking at superior risk-adjusted net returns. So risk-adjusted properly to make sure they account for the risk properly, and net of necessary expenses. That's really how we look at it over a long-term period. Do you want to add to that? Go ahead, go ahead. Here, go ahead.
One of the, so over the last maybe 3 years, roughly three years ago or so, one of the things we did from a compensation perspective was to ensure that we improved the alignment between Aimco and our clients, and part of that change was to introduce absolute return as part of our compensation scheme, in addition to relative return relative to a benchmark. The idea being that if we've outperformed by 50 basis points, but the portfolio is down 10%, we as well are in the same boat, if you will, relative to our clients. And I think that's fundamental speaks to how we think about the overall return rather than just segments of returns.
And if I may, Mr. Chair, not only have we done that, but we've also increased, I think in the last year, the amount that is attributed to absolute versus relative. So not only have we made that difference, but we've actually increased the concentration, the relative amounts.
And the department,
If we could add from the department's perspective as the asset owner, to the first part of your question on sort of income generating assets versus growth, with the very long stated growth mandate of the fund, not the growth mandate, the mandate to grow the fund. Certainly, as we go into our next review of the asset mix, it's something that we'll take into consideration because government is no longer drawing income out of the fund in the form of cash. We are able to take longer-term horizons, consider longer-term horizons when we consider the asset mix. So that will factor in to how the fund is invested in the future and to what the new asset mixes will look like. And that will ensure that the fund is invested to grow, but it will also mean that the fund is more difficult to draw out of in future years by design.
thank you. So my final question is to sort of summarize the discussion around the Alberta growth mandate, and that from my perspective, I would like to see really a final set of accounts for the Alberta growth mandate. It was set up, I think, properly in the sense that you had all the commitments and the detail of the investments for Albertans to see. And then in 2020, the books were closed with no explanation other than, we met, all the investments met their return. And I think subsequent discussions show that that's probably not quite true. So what a spreadsheet, a very simple spreadsheet would show is the value at the commitment date, and then the final value as at March 31st, 2020. And what was it worth? Was it if the stock was trading and the Heritage Fund had 100,000 shares of CalFrac at $1.20, then you do the multiplying, and that will give at least me some closure as a taxpayer that the accounts have been closed, and that the public and the legislature can evaluate whether this was a good experiment or not, and what kind of questions it raises as to the investment strategy pursued by Aimco on behalf of the government. Thank you.
All right. Thank you so much for that final comment there. With that, we will go to Mr. Hunter.
Thank you, Mr. Chair. I just have one quick question. So as we have changed our strategy with Alberta Heritage Savings Trust Fund and are retaining now their earnings and are putting money in, potentially, hopefully, how does that affect the capacity of Aimco in terms of just the volume will be different, obviously. I mean, there should be some positives and some negatives. The positives would be economies of scale. But how does it affect you in terms of even how much you pay your managers? Is that change at all, or is it just on volume, or how does that work?
No, it's basically in the sense of you asking the question, it's just on volume. There would be more economies of scale with asset growth than any other effect. There'd be a small increase in expenses, but it's not that significant.
To add to Mr. Siddall's answer, one of the things it does benefit the Heritage and all clients collectively is our ability to work more effectively with our strategic partners. So that's been an initiative that we've undertaken roughly 2 years ago, and the idea is along the lines what your question was, how do we take the dollars as the amount grows to remain impactful and get better economics, and that's been the thrust of that initiative.
To make a very simple example, if we invest $1 in a fund, we're now asking for, in private debt, $4 of co-investment. We don't pay on your behalf, we pay no fees on that. So the fee's gone down 80% in that particular case.
Thank you so much for that. Is there any final questions from our members of the public in the room? Young man? I just want you to know your mother's leading you down the right path. Follow her. There's no more questions online. There's no more questions on the line. Seeing as there are no more questions, we're going to wrap up our meeting today. I'd like to sincerely thank all of you for your participation tonight. I think I can speak on behalf of the entire committee when I say that we have enjoyed spending the evening with you all and engaging in conversation about the Alberta Heritage Savings Trust Fund. In turn, we hope that you found the meeting productive and valuable. There is a survey posted on the Assembly website and its Facebook and X accounts, seeking your opinion on tonight's meeting and how we can improve it for next year. Any feedback you can provide would be very helpful. To everyone who interacted with the committee or watched proceedings this evening, thank you so much for your interest and participation. Your engagement regarding the fund and the work of the committee is greatly appreciated. We look forward to next year's meeting. I will call for a motion to adjourn. Would a member move that the 2024 public meeting of the Standing Committee on the Alberta Heritage Savings Trust Fund be adjourned? Mr. Hunter. All in favor? Second by Mr. Brar. All in favor, please say aye. Aye. All opposed, say no. With that, the motion is carried. The 2024 public meeting on the Standing Committee on the Alberta Heritage Savings Trust Fund is now adjourned. Thank you all so much.